Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 14th of May 2019 and we are covering today the rise in gold prices as a result of recent escalations in the US-China trade war. So here goes. Yesterday, we produced a podcast entitled, quote, China-US Trade War Escalates, Markets Fall, unquote. If you haven't already heard it, we strongly recommend that you do so, as we would like to think that we were one of the first to discuss this matter before it became overwhelmed by the normal daily news shows. We've placed a link to that podcast in the description below. We pointed out yesterday that last Friday, the US increased a 10% tariff on $200 billion worth of Chinese goods to 25%, thereby escalating the trade war with China, which then retaliated with imposing tariffs on $60 billion worth of US goods as from June. Stock markets tumbled, with the Dow Jones Industrial Index closing the day down 617 points at 25,324, a fall of some 2.38%. The Hang Seng Index closed down 432 points, that's down 1.5%, while most European indices rose, albeit modestly. Interestingly, the dollar index closed on Friday at 97.33 and today it stands at 97.34, up 0.01. Interesting that the dollar should strengthen on the back of news that could potentially be very damaging to US and global trade. The purpose of today's podcast, however, is to assess what happened to gold amongst all of this. Well, we remember from our weekly update that gold closed the week at 1286. And opened higher, rising to 1303 on the trade conflict escalating. Its highest level since April the 11th and its largest one-day percentage rise since February 2019, a rise of 1.1%. Clearly a run, albeit a small one, to safe haven assets by investors. Currently, at the time of producing this podcast, however, gold stands at $12.98, but does appear to be holding firm. But we noted that there was some profit-taking in Asia as prices rose above $1,300. Clearly an important resistance level. Jeffrey Halley, Senior Market Analyst Asia Pacific at Oanda, stated, quote, people are looking to find a safe harbour in the storm while they wait for the dust to settle. Prices could further rise to 1310 to 1312 if stock markets end lower. But any sudden breakthroughs in the trade standoff possibly could see investors stampeding for the exit as fast as they arrived, unquote. Now, to many gold bugs, the failure for gold to continue its rise is indeed disappointing. But to be fair, this trade dispute could also be over in the not-too-distant future, and as markets tend to look ahead, as well as respond with knee-jerk reactions occasionally, the general consensus is that there is too much for politicians to lose on both sides not to eventually come to a satisfactory conclusion. However, government officials and traders are also conscious and concerned that China, being the largest foreign US creditor, may decide to dump treasuries. We suspect that will not happen with any force, as they would find themselves selling assets at much lower prices. What is more likely is that they do not renew such assets as the current ones mature. What is also concerning, and we raised this tentatively in the weekly update, are escalating tensions between the United States and Iran, and especially after Saudi Arabia said yesterday that 2 of its oil tankers were among those attacked off the coast of the United Arab Emirates. Stephen Innes, head of trading and market strategy at SPI Asset Management, stated, quote, "The Middle East escalation news brings us a step closer to a significant US military reprisal. Fears that China will weaponize US treasuries in trade war retaliation is scaring the daylights out of markets, even if it is unlikely." End quote. Yesterday, it was interesting to note that the Chinese yuan weakened to 6.92, its lowest level since December the 24th. China is expected to intervene to stop any plunge below 7 against the dollar. At the time of writing, though, it has slipped even further to 6.89. Silver initially fell on opening and was heading towards 1460, but soon reversed course and is currently standing at 1481, up some 3 cents against Friday's close. We have to be aware of the fact that silver, whilst benefiting as a secondary precious metal, will be damaged by any trade dispute in its role as a primary industrial metal. And if these geopolitical issues were not escalating, we would certainly see silver resting at or below 1450 today. So what are your thoughts on the direction for gold? The general consensus is that it will consolidate and possibly firm further, and of course rise if tensions escalate vis-à-vis China, Iran, and let's not forget about North Korea either. If these issues resolve themselves, then undoubtedly stock markets would once again be on a tear, and perhaps gold and silver would be abandoned while that occurred. Do share your views. It would be interesting to assess what you predict may happen. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.